For Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Hello, Bruce.
All right. Happy Monday to you.
Yes, sir. Yes, sir. It was a wild and crazy weekend, I can tell you.
Well, I'll tell you what, I got some contracts come in this weekend. How was yours?
Well, I was one of them. So
I know you were.
Yeah, so that was good. And on top of that, my Giants won. So, I had a pretty happy weekend. But more
That's the
importantly,
Jolly Green Giant. Is that what we're talking about?
the New York Giants, New York Football Giants, my friend. So,
All right.
Originally from Long Island, so I can't help it.
And the Gators won, but it didn't mean anything.
There you go. There you go. So hey, but I will say this. The market is starting to crack open a little bit. It's not quite
I
busted.
think you're right. I think you're right. There's still a lot of hesitancy out there, though. There's still a lot of people that are still buyers and sellers that are still sitting on the sidelines thinking that something's going to change, that the economy is going to get better. So I think the first thing we need to address is the Fed cut and how that is affecting rates. Now, you and I have been telling everybody for 2 months before that happened that it was already baked into the pricing. But even loan officers I saw and realtors, the day the Fed go, did rates drop a half a point? They're just not paying attention to the way the economy works and the way the market works. So when you choose a lender or you choose a realtor, if you don't choose somebody that understands that market, go find a different real estate agent, go find a different lender, because they if they're oblivious to that, they don't understand how the market works. Now, I spend my days studying the market to understand how it works. I knew that rates would not drop when the Fed dropped the Fed meeting or dropped the Fed rate. Why? Because it was already baked into it. Now, I even said, if you go back and replay one of my podcasts or a few of them, that there is a good chance that rates could go up instead of down. And I said it and it did it. Now, let's look at the market here for a second. All right, it just changed from down 23 to down 19 basis points. So this is the bond market. This is not the stock market. This is what dictates what interest rates are. So we want this number to be up. We want bond yields to be doing well. We want the bond market to be doing well. So typically, if the stock market's doing well, it's the opposite to the bond market. So look at what rates have done since the Fed dropped the Fed meeting. I'm going to scroll up here just for a second. To a chart. Can you see that chart?
Yep.
Let me see if I can get that. All right. So there's your dates down there. And let's just get that into perspective. So here's your Fed cut. And then here's what happened after the Fed cut.
So, and when this goes down, rates go up.
Right. When this is in a negative, yep. And if we look at this, let's go back over here for just a second. This number indicates how much a client would pay extra in terms of points for the same rate. So if the rate stayed the same from Friday to today, it would cost them almost 20 basis points more. So $200 for every 100,000.
Okay. All right.
Okay.
Yeah. So this isn't necessarily, I mean, I realize indirectly it is. It isn't necessarily rates going up. It's how much you need to pay to buy a rate.
Well, you have to remember that interest rates are really, when it comes to the back end, are all tied to the discount, which is not a discount. It's the opposite. That's an oxymoron.
It's a typical government thing where we call it one thing because it really is another.
Because it really means the opposite.
That's
right.
right. That's right.
It's like when we say you're going to be saving. No, it's going to cost me more money. I can feel it.
Right. Yeah. The Inflation Reduction Act, right?
Yes.
Yeah.
So, but in reality, here we just dropped to 16. So it's getting a little bit. It's not as bad. It's getting less worse as the day goes on here. We'll see how that plays out for us. However, mortgage rates are really tied to the discount. So when we look at it, yes, that means the rate increased. That's exactly what it means. However, it's fractional on the rate. It's really affecting your pricing more often.
Gotcha.
Okay.
Gotcha.
But for every 100 that goes, it costs you a full point.
All right. Well, that's and there you have it, which is why you have somebody smart watching the market for you. And that way you don't have to worry about it. And I just go to Bruce whenever I have a question about what's going on in the market.
Well, here's the deal. Right now, and I love this show because we're completely transparent and honest with people. Right now, there is still the majority of people that honestly would like to buy are still sitting on the sidelines. Now, more of them have jumped in since the Fed dropped, but let's just say that only 2 in 10 people prior to the Fed dropping the rates were actually buying in the market. Now, maybe 3 in 10 are buying, but the other 7 are still sitting on the sidelines and they're going, I think rates are going to drop more. I think the housing market's going to crash. I think prices are going to go down. Well, let's just address each and every one of them. Prices going down. Builders have dropped their prices a little bit. But I got word today that 2 builders, big builders, are raising their prices today. That means they have written more contracts recently and are going to pull it back a little bit and they're going to raise their prices, right?
Sure.
So they had already dropped it. Sellers have been more realistic. Some of them are still a little, asking a little bit more. But if you were a buyer and you really wanted to get into the market, interest rates are a point and a quarter better than they were 2 months ago. Come on, you got what you wanted. You're never going to see the 2s again. You're not going to see the 3s. You'll be lucky if we see 4 3/4 in the next 10 years. But don't expect interest rates to drop significantly anytime soon. Home prices are more likely to go up faster than rates are going to go down. Now,
absolutely. And I'm going to tell you, man, the one thing that I'm going to say is that it is a fantastic time to buy if you're ready, right? The rates are reasonable. The rates are good. And where you are is if you're smart, if you don't have to find the perfect home, if you want to find a great home at a great price and not have a lot of money out of your pocket, the strategy that I'm using right now is showing people houses that have been on the market for 30 to 60 days and they haven't sold yet. And they've even had a price reduction, right? And they still haven't sold. Because usually when we go into one of those homes, we can make an offer and we can make an offer list price. Hey, listen, I don't need a discount, but I need you to help my buyer with closing cost credits.
Right.
And we just got a buyer 10 grand in closing cost credit on top of the fact that they got down payment assistance. I think they wrote a $1,600 check to close.
Tom, I'm going to just kind of clarify something here. That is exactly why I referred that client to you, because you really do look out for the client's best interest.
Absolutely.
And I'm going to tell you something, that deal wasn't easy either. It was not an easy one to maneuver around. And we got him down payment assistance, right? So you combine that with everything and it makes for some challenges. But the fact of the matter is you negotiated the crud out of that deal and you got them everything. I think they're coming to the table with $1,000, maybe $1,500.
$1,500,
You can't rent an apartment for that.
No. That was a fantastic deal. And that strategy is working. You know, that strategy is working across the board. So,
Yeah.
we're gonna run out of time here, Bruce. We do have to move on, but
hey, I got one more thing to say to our listeners out there, realtors,
hit me.
lenders. So listen, business is picked up. I'm back to hiring again. I need 2 loan officer assistants, preferably licensed, preferably bilingual, but not necessary. 2 years experience in the mortgage business. I'm hiring loan officers to help me take care of my realtor database and my builder database. If you are a lender with 2 years experience, licensed, call me. I'm looking for some more help. I got great company, great programs, great benefits. Let me know if you're interested.
I can attest to that. I know the majority of Bruce's team, and they're all fantastic to work with. So,
Well, appreciate that very much. You guys have a great week. And Tom and I work in all 50 states, and we're always here to help you. If you need any help whatsoever, we're here.
all
Thanks.
right, you got it, Bruce. Have a great day.
See ya.